Welcome back to Cryptocurrent, the future of digital finance. Today, we'll explore how the COVID-19 pandemic reshaped the cryptocurrency landscape in unprecedented ways, fundamentally altering how people perceive, adopt, and interact with digital assets. The pandemic disrupted almost every industry worldwide, driving financial uncertainty and shifting societal norms. Yet for crypto, this turmoil acted as a catalyst for massive adoption and innovation. From Bitcoin's status as a safe haven asset to the explosion of decentralized finance DeFi and non-fungible tokens NFTs, the pandemic highlighted the unique strengths of blockchain technology and digital currencies. Throughout this video, we'll break down how the COVID-19 crisis acted as a game-changer for crypto, examine its impact on investment patterns, adoption rates, and explore how it accelerated developments in blockchain technology. At the onset of the COVID-19 pandemic, traditional financial markets plummeted. This sharp decline created widespread panic, with investors rushing to safeguard their assets, leading to increased interest in alternative stores of value. Initially, Bitcoin and other cryptocurrencies followed this downward trend, as many investors sold off assets to gain liquidity in the face of uncertainty. However, the crypto market quickly rebounded, with Bitcoin and other major cryptocurrencies regaining value at a rapid pace, sparking renewed interest in crypto as a hedge against economic instability. This recovery encouraged people to view crypto as a possible hedge against inflation and an asset uncorrelated with traditional markets. As central banks around the world implemented monetary stimulus and adopted near-zero interest rates, concerns about inflation increased, reinforcing Bitcoin's appeal as digital gold. By the end of 2020, Bitcoin had broken all-time highs, largely due to this narrative of being a store of value immune to inflationary pressures. The financial impact of COVID-19 also led many institutional investors to enter the crypto space for the first time. Traditional financial giants, such as MicroStrategy, Tesla, and Square allocated portions of their cash reserves to Bitcoin, demonstrating confidence in cryptocurrency's long-term value. This institutional interest marked a turning point for crypto, as these investments lent credibility to the industry and encouraged other large firms and traditional investors to follow suit. Companies were looking for ways to preserve capital in the face of uncertain markets, and Bitcoin presented itself as a viable solution. Furthermore, the high-profile endorsement of cryptocurrency by prominent figures and institutions gave the industry a new level of legitimacy. This institutional backing, fueled by the economic instability caused by COVID-19, marked a major shift in how cryptocurrencies were perceived, transforming them from fringe assets into mainstream investments. Beyond Bitcoin, the pandemic fueled growth in the broader cryptocurrency and blockchain sectors, most notably within decentralized finance, or DeFi. The economic instability and unemployment caused by COVID-19 led many people to search for alternative ways to generate income, and DeFi emerged as an attractive option. Decentralized finance, which allows users to engage in activities such as lending, borrowing, and earning interest without traditional banks, gained popularity as people sought to have more control over their finances. Platforms like Uniswap, Aave, and Compound saw an influx of users eager to participate in DeFi protocols that promised higher yields than traditional banks could offer. This period became known as the DeFi summer, with the total value locked in DeFi platforms skyrocketing from a few $100 million to tens of billions of dollars within months. The DeFi boom, spurred on by the financial challenges of the pandemic, highlighted the potential of blockchain technology to disrupt traditional financial systems and provide new financial solutions. The pandemic also accelerated the development and adoption of non-fungible tokens, or NFTs, with people spending more time online and exploring digital forms of entertainment. NFTs gained traction as a way to own and trade unique digital assets, ranging from art and music to virtual real estate and collectibles. Artists, musicians, and creators saw NFTs as a way to reach their audience and generate revenue in a time when traditional income streams, like concerts or in-person art sales, were limited. The NFT craze peaked in 2021, with high-profile sales making headlines globally, attracting attention to the possibilities of digital ownership and blockchain-based creativity. This boom in NFTs is directly tied to the social isolation and economic disruption caused by COVID-19, as it provided both creators and collectors a novel way to connect and transact digitally. The success of NFTs also expanded blockchain's reach into popular culture, introducing millions of new users to the concept of digital ownership and increasing mainstream awareness of crypto technology. COVID-19 also shifted how people viewed the traditional banking system and the role of central banks. With the introduction of massive stimulus packages, quantitative easing, and historically low interest rates, public confidence in conventional finance was shaken. Many people began exploring alternative financial systems, and cryptocurrency's decentralized nature presented an attractive alternative. Blockchain technology's ability to provide transparency, immutability, and security appealed to those disillusioned with centralized finance. This shift in mindset fostered a stronger belief in the value of decentralized systems, creating a new wave of crypto adoption among those who had previously been skeptical. The pandemic-induced economic uncertainty highlighted crypto's potential to offer financial independence, spurring growth in both retail and institutional adoption as people sought greater control over their wealth. The changes brought by COVID-19 also encouraged many countries to explore central bank digital currencies, CBDCs, as a way to modernize their financial systems. With growing interest in digital currencies and blockchain technology, several central banks began researching and piloting CBDCs, recognizing the potential of digital currencies to streamline financial transactions, enhance payment efficiency, and improve financial inclusion. China led the way with its digital yuan, while countries like the United States, Japan, and the European Union started to explore their own CBDCs. The idea of a government-backed digital currency gained traction, as it promised the security and stability of traditional currency, combined with the efficiency of digital payments. COVID-19 made clear that the financial world was on the brink of a digital transformation, and central banks saw CBDCs as a way to adapt to the rapidly changing landscape. COVID-19 also shifted work environments, fostering the rise of remote work and virtual collaboration, which impacted the cryptocurrency industry's growth in unexpected ways. With people working from home, interest in digital assets grew as individuals had more time and resources to explore investment opportunities online. This shift also impacted crypto companies and projects, which began to operate in a more decentralized manner, aligning with the ethos of the technology itself. Remote work allowed crypto projects to tap into global talent pools, facilitating growth and collaboration across borders. Furthermore, with more people online and available to participate in digital communities, crypto projects saw an influx of contributors, users, and developers. This remote work culture helped strengthen the collaborative nature of the crypto space, driving innovation and increasing the resilience of decentralized projects and communities. Finally, the pandemic-driven digital transformation has had a lasting impact on the perception of digital finance and blockchain technology. COVID-19 accelerated the adoption of digital payments and online financial services as people sought contactless solutions for everyday transactions. This shift toward digital finance created a favorable environment for cryptocurrency, as digital assets became more accessible and familiar to a wider audience. As people became more comfortable with digital finance, they also became more open to exploring blockchain-based solutions, increasing crypto adoption across the board. The pandemic showed that the future of finance was digital, and cryptocurrency emerged as a key player in this transformation. In summary, the COVID-19 pandemic acted as a catalyst for profound change in the cryptocurrency space. It propelled Bitcoin into the spotlight as a potential safe haven asset, accelerated institutional adoption, sparked the DeFi and NFT booms, and led to increased regulatory scrutiny. Stablecoins grew in popularity as a bridge between traditional and digital finance, while CBDCs gained traction as central banks sought to modernize their financial systems. The shift to remote work and the widespread adoption of digital finance furthered the growth and adoption of crypto, as more people than ever explored decentralized finance, digital assets, and blockchain technology. The pandemic reshaped the way people perceive and engage with crypto, setting the stage for the continued expansion and evolution of the industry and a post-pandemic world. If you learned something today, please like, subscribe, and turn on notifications for more deep dives into the future of finance.